Good morning, good morning. So today I made $515 in about an hour and a half. And in this video, I'm going to give you a quick trade recap of a system that I use pretty much every day. And if you want to see it live, I do trade live Monday through Thursday. Just go ahead and subscribe to my YouTube channel, hit the bell, and you'll be notified every time. So let's jump right into it. So today I took two trades. So the first step that I normally do is I identify the opening range on the 2-minute chart. So you can see that we have this high right here, and then we have this low right there. I did notice that we had a gap to fill. Most gap fills happen 70 to 80% of the time. So that can be an edge in and of itself. I've actually made thousands of dollars trading gap fills. So I wanted to put that to the test today for the first trade. So you see we had that high, we have this low, we got a nice little pullback. Normally I look for two pullbacks or two legs, right? So we only had one right here, we came back down, and then we just had this sideways action. Like, I know for my setup over back testing thousands of trades that sideways action is low probability. It doesn't invalidate my entry model, but it is low probability. I like to look for one leg up, one more down, and then a second leg up for a continuation to the downside. But I went ahead and took this trade anyway at the break of this consolidation, set my stop loss at the high, and then I went for a 2R. Okay. And the reason why I normally go for a 2R is to make up for all the future losses that will inevitably happen. So I like to have a nice little cushion on each winning trade just to prepare for my future losses. So my 2R is about right here. As you can see, we got pretty close. So because this was like such a low quality consolidation period of my entry model, I went ahead and took my stop loss that was at the top of this pullback, and I put it right at my entry because I wanted a straight shot down. And if I couldn't get it, I'll be at break even. So as you can see, we went straight down, didn't hit my profit target. Nice little sweep happened, stopped me out at break even. Now, the good part about this, right, about taking this opportunity and taking this chance on the first trade is when I got stopped out, I didn't care that I lost that trade or I exited that trade. I looked for market feedback immediately. Each stop out should be an invalidation point for your plan. So if you get stopped out, that is the market telling you something. So what did the market tell me once I got stopped out? It showed me that a nice liquidity sweep happened. And if you look at my last video, which is about 3 minutes long, I explained how the foundation of my setup is liquidity sweep, entry model, 2R, and then stop loss at the bottom of the liquidity sweep. So we got my liquidity sweep. That's the first step checked off. The second thing we want to look for is a high probability entry model. Like I said, I normally look for two pullbacks, two legs, and then the break of a neckline, and I'm going for the long or the short. So since we're going long in this situation, you can see that we had two legs, one right here, and then one right here. Since this one wasn't as strong as I would like it, I went to the ES chart, right? Because they pretty much mimic each other. NQ and ES pretty much mimic each other. So if I could have got a higher quality entry model on ES, I would have took the trade on NQ and hope that NQ has more volume and more momentum than ES so I can yield more on my trade. So as you can see, we had the first leg on ES, clear second leg on ES. The break of the neckline was clear as day. And as soon as we broke this neckline and this candle closed, I went for the longs on NQ, setting my stop loss below this impulse candle just in case another sweep occurs by chance. And then I went for a 2R. So my 2R on the higher time frame was near a liquidity level, a liquidity pool, right? So whenever we face liquidity, price normally retraces right before it hits your profit target, right? If it's at a liquidity level. So I scaled out 4 out of 5 of my contracts right before the liquidity level just to secure those profits, just in case we don't push past it. And obviously we did. So I left one runner on the table to continue to clean up. But as you can see, we had this big impulsive push down, right? Stopped me out. And therefore I netted $515 on the day. Okay, so just a quick review: liquidity sweep, nice entry model. If the entry model is not high quality on NQ, you can always go to ES to look for a higher quality entry model and just go on NQ, or vice versa. If you want to look at NQ and then do ES, or ES then NQ, and then you can enter on the respective instrument and then go for your 2R, right? Right before the liquidity level, I do scale out so I don't have to potentially face any type of drawdown or reversal before we hit that liquidity pool. And I leave one runner, one contract to clean up. And if it does, better for me. And if it does not, my profits are already secured. So I hope this video helped you out. I know it was pretty short, but it was a pretty short trade, and I'll see you guys tomorrow.